Have you ever felt like you're getting whiplash just from reading the news? Well, that's pretty much what the economy has been dishing out this past month. I mean, on one hand, you're hearing about record highs, total euphoria, and on the other, dire warnings and sudden market plunges. It feels like a total roller coaster, so let's try and make some sense of it.
Okay, just look at this. These two headlines, they're from the exact same month. Just a couple of weeks apart, the S&P 500 goes from having its worst day in almost half a year to hitting a brand new all-time record high. I mean, come on. This right here is the chaos we're diving into, all in one perfect, confusing snapshot.
So yeah, that's the big question for today, isn't it? How can the market be so doom and gloom one minute and then wildly optimistic the next? What in the world is pulling it in such completely opposite directions?
Well, the thing is, it's not just one story driving the economy. Right now, there are two, and they are basically in a head-on collision. To really get what's going on, we have to walk through the month, step by step, and see how each of these narratives fought for control.
So, our story kicks off with a real shock to the system. A ghost from the market's past came roaring back, and it was a pretty stark reminder that global politics can still throw everything into a tailspin in like an instant.
So the timing here is absolutely everything. Look at 10:57 a.m. The market was just kind of coasting along, and then, boom, a single social media post brings the whole trade war fear right back to the front page. And what's really telling is that the dip buyers, the investors who usually jump in when prices fall, they stayed on the sidelines. That tells you the fear was deep and it was real. And this chart really just drives home how much damage was done in one day. The tech-heavy Nasdaq got absolutely hammered, dropping more than 3.5%. This is a classic reaction, right? When you threaten global trade, companies with these huge, complex international supply chains, like a lot of big tech firms, they're seen as the most vulnerable.
This quote just nails the psychology of what happened. See, the market hadn't just forgotten about trade wars, it had gotten complacent. It just assumed that risk was in the rearview mirror. So the shock wasn't just the news itself. It was that sudden, cold realization that this major risk was very much alive and kicking.
But just as that old fear was taking hold, a powerful new story surged back with incredible force, and it completely flipped the script. So now we move to Act 2, the unstoppable force of AI euphoria.
Let's just talk about the sheer scale of this number for a second. $500 billion. This wasn't just a good forecast from NVIDIA. This was a number so gigantic, it basically single-handedly mainlined a huge dose of optimism right back into the market. It suggested the AI revolution was way bigger and happening way faster than anyone thought.
And here you go. You have the man at the center of it all, Jensen Huang, telling the world straight up, this is not a bubble. A statement like that from the CEO of NVIDIA, it adds a tremendous amount of conviction. It's almost like giving investors permission to believe the hype is real.
And this proves the euphoria wasn't just about NVIDIA. Microsoft smashing through a $4 trillion market cap on the back of a $250 billion deal, that solidifies the whole narrative. This wasn't just one company's story anymore, it was an entire ecosystem in overdrive. The AI story now had a second, incredibly powerful engine.
Okay, so first we have the trade war shock, then the AI euphoria. But, as you know, the market rarely moves in a straight line. Just as that optimism was hitting its peak, a bunch of counterpoints and warning signs started to pop up, hinting that the reality on the ground was, well, a lot more complicated.
Now, to understand what happened next, you really need to get this concept, the K-shaped market. It's a simple idea, but it's super powerful. Just imagine the letter K. The top arm is shooting up, but the bottom leg is heading down. And that's exactly what was happening. A handful of mega-cap, AI-driven stocks were soaring, while pretty much everything else was just struggling.
And wow, this chart just lays it bare. This is the market on October 28th. That's the day the S&P 500 hit its all-time high. But look closer. Over 400 stocks in the index went down that day. Only about 100 went up. That entire record was being propped up by a tiny, tiny handful of winners. The rally was razor thin.
Here is that K-shape in action on that exact same record-breaking day. You've got NVIDIA, the leader of the whole AI boom, surging almost 5%. And on the flip side, you have the Russell 2000, that's an index of smaller, more Main Street type companies. It was actually down. Two completely different economies, living in the same world on the same day.
Then the warning signs really started to pile up. The Fed kind of poured cold water on everyone's hopes for a rate cut. Meta stock plunged, showing that just spending billions on AI doesn't automatically mean profits. Then you hear from Chipotle's CEO giving us a peek into the real economy where people are struggling. And crucially, even the AI story started to show cracks, with a huge investor cashing out of NVIDIA and a key supplier warning about problems.
And then came this bombshell. This is from Michael Burry, the famous investor from The Big Short. And he's basically accusing the biggest tech companies of using accounting tricks to make their AI investments look way more profitable than they actually are. This wasn't just another warning sign. This was a direct attack on the very foundation of the whole AI rally.
So, where does all of this leave us? Well, we're in an epilogue that you could call the Great Divergence. We have two powerful, convincing, and completely contradictory stories about where we're all headed.
At the end of the day, it all boils down to this clash of narratives. The bulls, they see a genuine tech revolution that's changing the world and making real money. The bears, they see a classic speculative bubble, built on hype and debt, and it's just waiting to pop. And the crazy part is, both sides have some pretty good points.
And here's the bull case in its purest form. You've got BlackRock, one of the biggest investment firms on the planet, not just saying the market could go up, they're saying a huge surge to S&P 7,000 is now their base case, their most likely outcome. I mean, that is an incredible amount of confidence. And then on the complete opposite end of the spectrum, you have this chilling warning. Not a small correction, not a little downturn, a potential loss of 70 to 80% of your money. It's hard to imagine two more different predictions for the exact same market. So how are investors even trying to navigate this? Well, this slide breaks it down into three main strategies people are following. Path 1, you bet the AI momentum just keeps on rolling. Path 2, you make a side bet on all the infrastructure needed to power that AI, like energy stocks. Or Path 3, you bet that this rally finally broadens out beyond just big tech to include, the rest of the market. Three very different bets on what happens next.
So if there's one thing to take away from all this, it's that the market isn't a single thing. It's really a battlefield. On one side, you have this incredible futuristic optimism of the AI revolution. And on the other side, you've got the very real here-and-now pressures of inflation, struggling consumers, and global risks.
And all this brings us to our final lingering question. With stock prices this high, especially in that AI space, it really feels like the market is priced for a perfect outcome. No recession, the bubble doesn't pop, no big setbacks. But what happens if reality turns out to be, a little less than perfect? That's the billion-dollar question every single investor is grappling with right now.